Hey guys, this is the weekly update for the Trade Analyst Application, and to be honest, not a whole lot has been done on a development standpoint for this application. I've kind of hit that point where I have what I have, and we're to that point where we're just gathering data to where we can continue doing more analysis on the data side to look for trade patterns and how to implement them. And it's kind of where it stands for that. I've been using this daily, and this is a holiday shortened day, and if the market hasn't closed, it's going to be closing shortly. I don't know if we've stopped trading or not. I think we have. So what I have been noticing now that I'm using this and looking at it during the day, the Schwab feed, as soon as you start getting into more volatile periods like the morning session for open, it immediately falls behind. We're not losing any data, just what it is sending is so delayed that it will be 20, 30 minutes, 45 minutes, almost an hour at times, depending on the news cycle or whatever events, or that day the markets just happens to be at an elevated level, it immediately falls behind. But at least the Tasty platform, sometimes they'll fall behind, but it catches up because since we get the updates multiple times per second versus the one per single second, if there is a delay on them aggregating their data and sending it out, you catch up a lot quicker. So most of the time it's running, as you see here, like 8 seconds behind, 13 seconds. It can't be in that stage for a large portion. Now I've noticed that in the after hours, Tasty will fall behind, but I'm just wondering if they're doing other things behind the scenes, or the data provider that provides this data stream that Tasty uses, that they're going into their maintenance, and then they just slow everything down for night. But nighttime there's not that much activity. What I have been seeing is that having these tools, I've been doing a little bit more night trading since it's less volatile, and the platform is not quite keeping up with real time data flowing in. So some of these signals that I'm wanting to see maybe a little bit ahead of time, I'm just not getting in time, because we're looking for that flip. Even though I'm running into a resistance zone of imbalance, we're looking for this flip signal to also happen in confluence with running into that imbalance zone. And because of that, I'm not getting a clean trade profile. But I'm making trades. I'm almost started trading every time we hit that to expect a pullback, because I don't quite have the history yet to know that I'm in a pattern where I should be expecting continuance versus the pullback. So we're taking some losses, but we're taking wins. We're making money with it so far, and that was the whole point. So that's where we kind of stand with this. It's been 3 months of doing this, development here, just piece by piece, adding pieces in. And so now we have a full product, something that's workable, and I'm really not satisfied, but I'm to the point where it's usable and I'm using it, and it's only through use that you start saying, yeah, I need this to be better. I know one of the things I've got to tackle is this session point of control. I don't think it's being calculated correctly. I think, because session point of control is supposed to be from the opening bell, and so it should take a few minutes to develop. But I think it's pulling maybe from midnight or some other point. But what has been real key is this rolling 60. The rolling 60 has been phenomenal on how it generates reaction points. Some of those areas where wondered why was it doing it, it starts resolving itself, because if you look at the rolling 60 right here, you can see some pings off of it. You were hitting that point where you're going off. Then others you're going through it, but it's pulling back. I may work it into a study later on to see if there's a trade that can be generated around that. But I've seen where if I'm hitting some trend lines and we break out, or we're breaking down and then it stops in between, it's stopping in between on these areas of the rolling 60. So it's telling me that there are algorithms out there, enough of them, that use that as a key trading element, that if it's deemed to be like a sideways market like today, buy at point of control, sell it the rolling 60 value area high, and so it just kind of helps reinforce everything. Every once in a while you get something to take it out, but you see it starts pulling out, but then it pulls back in. It almost never closes the candle too far out between that rolling 60. Today was a holiday. We're in holiday. The regular market's closed. The futures are open. It's trading. There's nothing really out there to push it around, and so it's just staying within these patterns of being between the R60s. And so that would have been what I would have traded today. But I have that there. Now I need to do some additional research on that, because visually this is what I'm seeing. It's like, okay, so I'm seeing it visually. Is there something there that I can make a trade off of? So that's one of the things that we'll go and start working on in the future. And I'm also looking at starting to expand this application out, besides doing research and creating reports for the research and stuff. I've always done options trading, so it's primarily all just option selling. And the way I like to sell, if I want to be more efficient, I've always wanted to be able to track things to a point where let me go into details on the option selling. So there's the everybody kind of refers to it as the tasty method. You sell an option out 45 days, and when it gets down to around day 21, you close it out at a 50% profit. Roughly, because if you look at the time decay of an option, it's that all things being equal, like the price of the stock never changes, volatility never changes, then the theta decay curve, that if you sell it at roughly 45 days, then basically 3 weeks later, 21 days, so you're half that time, you've actually gotten about half the value of that option that you sold for, and you close it out at that point. And the reason why you do that is that you eliminate a lot of the option assignment risk that happens, as you get closer and closer to that. Because the options were priced that on the day of expiration, the probability of that option being in the money or out of the money is, basically what that delta is. So if you sold at 30 delta, then there's a 70% chance that option's going to end. The stock price is going to end around that option price, that option strike price that you sold the option for. And the way to get around that 70% and turn it from getting that 70% expiration to higher is that you accept less money and you boost your returns. And I've seen it, you get over like 90% of the time that you make money off of the selling. Well, not everything's constant, and because not everything's constant, you can get some accelerations of the option decay. So you sell a put, the stock goes up. Not only does the theta decay, but since it's gone from being a 30 delta option to a 10 delta option, it's lost other value. And so because of that, you've accelerated the value of the option that you would gain. And so I like to look at it like you sell an option at a certain price. We'll just use this line, and you've entered into a timeline. And so, and you can say these vertical lines are days, not these minutes. So this is just a kind of a quick explanation. So when you sell an option at this point, then, and I'm looking at to day 21, that's when I want to cash out the option. That this is my theoretical value of the option as it decays over time. Well, since things are not constant and the stock price is moving and volatility is expanding or contracting, that option price is going to change. And if the stock price falls and you get closer to your put, then it's like going back in time, because that option is going to start gaining in value, and it could be more it'll gain value beyond what you sold it for. And so technically you're losing money because you sold it at one thing, and if I want to close it out, I'm going to have to buy it at a higher price, and that's not what we want. So in those time periods where it actually goes in your favor, you could actually say, I sold it on this day, and the next day my value should be like this, but the stock jumped in value so much that my price is up here or down here. And so the value that I've gained is a lot higher than just 1 day of decay. Well, how much further out in time does that actually equate to? I'm already hitting day 21 and I'm on day 2. If so, you should close out after 2 days in it. That's in the story. You've hit your profit target and you've hit it 2 days. Now you can go look at something else, or you can stay in the same underlining but sell at a higher price and hopefully continue to the right as the stock keeps continuing to the upside. And that way you're capturing more theta each day, or more extrinsic value is coming out and going into your pockets, and you just keep recycling, and you're not increasing your capital load, but you're actually increasing your returns because you're cashing out and not waiting for that 21 days. There isn't really a tool out there that does that, and I've always wanted to do that. And so one of the things, I have a lot of investment accounts, and they are like the IRAs, and so it's money I can't touch until I retire. And another way to boost your IA performance is selling options, and selling options in this way I can close them out and roll them a lot quicker than sitting around waiting for it to expire. I've switched around, like last year with all the volatility in the options market, or in the market in general, that the front end of the risk curve was so much higher than the back end, because we didn't know what was going to happen day to day, and the option prices reflected that. And so it was actually worth your while to, because it was expected volatility that then turned out to never have materialized. And so the options were way overpriced in the shorter time frames than in the longer time frames, because the concern was, well, what's going to be said today? What's going to be said tomorrow? How's it going to react? And the reactions were always negative or bad, and so your put premiums were really, really high. And what happened after the recovery, after Liberation Day last year, is that we had a sharp rebound, but the option prices in the short time frame were extremely high, and then so you'd sell that 1 week option, and a couple of days later it'd be nearly worthless. And so instead of trying to do it in the 45-day option, the price would barely change, because the future risk was a lot lower than the present risk. And so there was I wouldn't say a mispricing, it's just that the short term was paying at a higher rate than the long term. And so it was better to just sell 1 week options, and I've kept that up with things. But the past few months, it's it's flipped out more to the normal standard. I've been saying that this market is like boiling the frog. We're assuming more and more risk, but not getting paid for it. Well, now the short-term risk the short term is not paying out nearly what the long-term risk is doing. And so I might as well go back to the old model. And before I do that, I want to start building out options tracking and options trade tracking. I've done this on spreadsheets, and now I just want to get this into a platform, since the AI agents have been really good at doing the development work. I know what needs to be done, and so now I have basically a full-time developer at my beck and call to actually do the work to get it done. So instead of manually doing everything on a spreadsheet, because one of the things with these data feeds already, I've granted myself access to my accounts. I'm not making trades with them, but I could, and I can now monitor the options trades in a way that I like to monitor them versus what the platform's providing, and keep track of the returns that way. So that's the next features and stuff will be going on. This chart's going to be here for doing the day trading and doing the research and analysis around day trading, but we're also going to start expanding out to looking at the options portfolios that I have and adding those features in and managing the option portfolios, and maybe setting up some automatic trades with for the options. I won't do day trading automated, at least not right now, because these data feeds are absolutely not trustworthy enough for doing day trading. But I know the option pricing and stuff that I'm pulling, it doesn't require a data feed. It's just get the price, look at it, make the decisions, and I can submit trades and have the trades do automatic price discovery. Because I've watched it's a manual discovery point on some of the more obscure underlyings. I don't tend to go into the obscures, but also, even, let's see, what's the one I saw somebody complaining about? Palo Alto Networks. That company, the options have been bad for as long as anybody can remember. The spreads on them were horrible. And I was watching a video where a guy was day trading Palo Alto and complained that he had to get out of the trade because of the news event that happened, and just an in and out he lost $10 of option value or something like that, because the bid-ask spread is $4 or $5 between the bid-ask spread. And even if you try to do price discovery on that, you end up going out to the bid and the ask. I mean, there is no give on that. I don't know if it's just the market makers, or not. You just do not get any kind of fills away from the bid ask, and the bid ask is wide. So it's just you're automatically in a money loser if you're trying to do quick turnaround trades. And that's one of the things I hope to see with the tools I'm going to build around the option stuff, that you can get a more clear picture of the bid-ask spreads, and keeping track of, because you can watch what things are trading at, because you can pull a data feed, and since that volume is a lot less, I should be able to get a live data feed off of specific held option contracts to see what kind of inefficiencies there are. Okay, and this is just a kind of a short rambling, because I've not really done any development work on the site. I've done some development work on another application that I'm working on for analyzing videos, because you're always constantly looking for ideas, new ways to do things, new stocks and stuff. And it's like, well, how do I trust the source? how do I find these ideas, or any of these ideas that they're talking about in generic sense? Is there a trade idea that can be found in that, or is this just a bunch of hooey and you don't want to do anything with what that person says, and so you put them on the block list, take it off of your YouTube feed. And if YouTube's forcing you stuff, it's like, why is that? Did I randomly watch the wrong video and now I've opened up the rabbit hole to a bunch of stuff that's just bad information? And then you can trim your YouTube feed that way. So I think that's what we'll do for the week. I'm going to do some analysis this weekend. I now have 3 weeks as of today of having both the Tasty feed and the Schwab feed, and nothing weird happened these 3 weeks. I didn't have any random outages, so we have 3 weeks of good data, and I can take a look at the entries. Like this entry just popped up, and it was really not there. I didn't see the conditions. We didn't have an imbalance showing up here. And so this is one of the things I got to, this is saying it's the second time it tested an imbalance. And then we had the entry point. And it looks like it met the entry. We entered in. It spiked up on its pullback as it came back into an area maybe. And then fell. We'll have to look. These are not popping up in real time because these, looking at the naming, it's based on the Schwab feed. And today the Schwab feed is good, but I just didn't see. We weren't in an imbalance zone, but now we're showing that a trade was validated there. So I need to do some research on these. This is where, using this live, you can start seeing where there may be bugs. Maybe these trades that are showing up are not really there at the time, and then it's getting marked. This is, since these candles can be 2 to 4 minutes delayed, it's not real time. And I may be starting to explore what I can take out of this and put into live trading platforms or not, and see if I can get the results. And maybe whatever I develop on that will end up maybe trying to sell as a trading tool on these other platforms. So that's all I have for this week. We're going to start working on the options program section and tracking options trades, and hopefully it'll be in a way that is beneficial and people will like. I know I will like it because it's something I've always had to do manually. Especially it has to do with, when you don't have that clean options trade. The price did move against you, and it stayed against you. And you don't really want to get out because the stock is going to just basically trade in a range. And you can work time in your favor. It's just keeping track of when you start rolling options. What have I made out of this trade? Once you roll, and you roll for a credit, you got to keep track of all those credits. Then you can say, okay, if I keep getting challenged, if it's not really behaving, can I roll down? Because you want to roll down closer to at the money, if it's an in the money option, to where you can collect more premium. So it kind of feeds. It's one of those things of how do you defend the position and when it goes against you. You've got options of instantly closing, or if the stock and you've been in it, you go, yeah, it goes through these periods where it moves against you, but eventually it comes out and then you get out. But while you're doing that, you collect. And as long as you're collecting enough theta, it's still worth your while to collect that theta if you're doing a weekly roll or a bi-weekly roll, because I like rolling, when you hit that 21-day to where you avoid the early assignment, as long as the option's not too far out of the money. If it gets too far out, you just close it out for a loss and just move on. But if it's not too far out and it's in the money, you want to reduce your option early assignment risk, because as long as there's enough extrinsic value in the option, you won't get assigned, automatically. Then you just roll it out a couple of weeks and let it decay. And if you collect enough, and you want to stay, okay, I want to turn this into a break-even trade, then once you get to that dollar, you hit a dollar value, then you roll it down a dollar, and then you collect even more theta as long as the price stays relatively close. Or if the price slowly drifts, you can keep moving that trade down and hopefully recover. That's one of the things is with the having a lot of small trades, to where none of the trades is more than 1%, or even some of these trades, I use, it's like not even 1%, it's like 0.1%. Then you have the luxury of being able to do that, because it's not really impacting the overall performance of your portfolio. And if it comes out, you've been collecting all this theta all the time, then you realize the profit at the end once it comes out, and you let the option expire, or you close it out at a profit. So that's where this tool is going to come into be something handy for keeping track and knowing that I've hit my break even. Even though the price is still down here, I've collected enough theta that if I close it out now, I can get out for break even. And that's what you want when those trades go against you, is to get back to break even if you can. That way you don't lose capital. So that's where we're going to leave it. Maybe I'll have something next week as the initial stages of the options. I don't know. We will see. We'll see how the research goes this weekend, because it may spur that I keep focusing on the day trade stuff. But the day trade stuff seems to have, I've got this one clear trade pattern, and I'm looking at another one, the continuation. So instead of hitting this point where you stick and get the pullback, you're just wanting to take the entry and write it down. Like in this case, it's just I don't have enough data yet, or I haven't found under what conditions should I expect a higher percentage continuation through the point. Because what we have here, I think we had originally this breakout bar is significantly bigger than that one. So then we hit a buyer's imbalance, and then these came back in and tested the imbalance the first time, and then we had a second test that came down and tested it, and then we should have had a pullback on one of these, it looks like. But the opposite of this trade of not doing the pullback is that I want to do a continuation trade, because we've hit these conditions. Or after I hit this, immediately just turn around and get into it, because we know that if this was one of the 80% times that we hit the 0.5 ATR, then turn around and get into it. Because what happens after this 0.5 is do I hit a full ATR range if I get back into it immediately and go the other direction, close this out, enter in immediately, and write it the other direction, because it does go into continuation and continues going in that trend. ATR here is 8, so we're dealing with 5 points. So it's at this range, it's not even worth making trades. You can see I've got a lot of bounces here. We've had a lot of touches and contacts, and we had some imbalances that got created and eventually closed out. So this is just kind of, it's what you expect in a holiday market. Okay, well, I think that is all I'm going to do for today, and we will talk again next week.